2022 has seen a lot when it comes to real estate. From 3% interest rates at the start of the year to flirting with 7%, homes selling way over asking price to homes requiring price adjustments, buyers skipping appraisals and inspections, to buyers getting accepted offers with home sale contingencies. The market temperature's been all over the place this year, and that's why it's easy to understand why there's been so many true and untrue stories out there. It can be hard to decipher what's really happening. So stick around and we're going to take a look at where we've been and where we're going in this month's Oregon-Wisconsin housing market update. Hey there, Oregon. I'm Jeff Minter, team lead of the Minter team at Realty Executives Cooper Spransky. So what's really happening out there? Do rising interest rates and inflation put us at risk of another housing crash? Or can you still expect your house to fly off the shelf the second you put a sign in the yard? First of all, I've said it before and I'll say it again, and it's worth repeating because it's true. And that's Oregon operates a little bit differently than the Dane County market at large, especially when compared to Madison itself. That's why hearing the story from your coworker about what happened on their west side house might be a lot different than what your neighbor's experiencing in Oregon. Important we understand that we're affected by these market conditions, but we just have a slightly different pace sometimes. As a home seller, it's super important that you understand where we are in the market so that you can set your expectations appropriately. One thing we want to keep an eye on is buyer demand. Now, we can get a read on buyer demand by looking at showing activity. Our graph here shows showing activity in Oregon, and the red is our average showings by week throughout the year. So you can see we start the year here, we typically trend up, hover around a little bit, have another little blip, and then come back down. Well, early in this year, in 2022, you can see we were well above average activity early in the year, and we remained right there with it or shortly above it, thereafter. Except for this small dip here for this 4-week session here, which must have been March into April. So since then, and since about mid-May, we've really dipped off. And you can see that now our buyer activity through many weeks has been much lower than it's been in previous years and definitely much lower than what we might expect. This could be a reflection of having fewer listings. If there's fewer houses to show, there's going to be less showings that happen. But the reality is that this year we saw fewer listings early in the year than we saw in previous years, yet our showing activity outperformed it. That's reflective of buyer demand. It's because of this demand and a shortage of houses that we've had such a crazy market. It's basic economics of supply and demand. So let's take a look and see what's really happening right now in our local market. Currently, things are at a much different pace than they were early in the year when we saw that spike of buyer activity. Of all the single-family homes listed since August 1st, 44% do not have an accepted offer. That's a wildly different pace than we've seen in recent years. Anecdotally, we really started to feel the rising interest rate and inflation punch right around that May-June time period. And if we look at our local market, we can see a noticeable change around that time. Home sellers today that are expecting the same experience as their neighbors had earlier in the year are setting themselves up for disappointment. It's super important that you set your expectations appropriately to our current market. Let's check this out. When we look at houses with an accepted offer prior to June 1st versus those with an accepted offer after June 1st, we see a huge difference. Prior to June 1st, the average house sold for 3.1% over asking price. Meanwhile, after June 1st, that number dropped to 0.4% over asking price. That's a roughly $10,000 difference on a $400,000 home. Also interesting, prior to June, 60% of our houses had competitive offers. Meanwhile, since June 1st, only 38% of accepted offers have been in competitive situations where the seller had more than one offer to choose from. Having a competitive offer situation on your house is huge. Whether it was before June 1st or after, the difference between having a competitive offer situation and a non-competitive one is about 5.6% in price. Okay, that's a lot of numbers, and I realize there's not a lot of numbers people out there. So if your head's spinning, let's look at this practically. Is now a bad time to be a home seller? Well, this is always a multi-layer question, no matter what the market is doing. But in a nutshell, if you need to sell, you'll be fine, provided you price it appropriately for today's market and expectations. And You don't cut corners when preparing your house for the market. We've felt that buyers are getting pickier and pickier with what they're seeing with their eyes. And so having your house fully ready to go on the market has become super important. If you're looking to maximize your equity, waiting to the spring might not be a bad idea. We are hearing that interest rates will likely drop a little bit in the springtime, and spring is always our highest peak of the year for buyer activity. This could lead to a more profitable sale for you, as we do expect home prices to continue to go up. So is now a bad time to buy in Oregon? A lot of people have been scared off by the rising interest rates and inflation concerns. And those are valid concerns. Yet today can actually be a decent time to be a home buyer because there's fewer buyers to compete with, and prices are at the lowest level we'll see for the near future. Since we expect prices to go up in the spring and throughout 2023, buying now is going to give you the lowest purchase price. And if rates come back down in the spring, you can always refinance into a lower rate, bringing that monthly payment down. On the flip side, buyers that are waiting for rates to drop before they purchase might not see much of a benefit because prices will continue to go up. In other words, you're paying more for the house in terms of the price, even though you're having a lower interest rate. One thing buyers shouldn't be concerned about is that purchasing real estate is a bad investment. In fact, most experts believe that we're going to see a continued appreciation of home values over the next few years. The difference is we've seen massive spikes in 2020, 2021, and 2022, and those numbers are more likely to come back to reality into a 3, 4, 5, 6% type of appreciation, as opposed to the 8, 9, 10% appreciation that we've seen recently. As always, if you have any questions about your unique situation, give our team a call. We love serving our Oregon, Wisconsin neighbors. Once again, I'm Jeff. Let's connect soon.